Capitec Bank reported a 35% increase in full-year headline earnings to 15 Rand. The bank's share of the unsecured market has also increased to 17% from previous 14%. Capitec declared a final dividend of 405 cents. The company closed over 3 1/3% higher to finish just over 205 Rand. To unpack this further, CEO Riaan Staasen, thanks so much for your time. Well, you're sitting with 4.7 million customers now. That's up 970,000 clients on the 12-month period. Phenomenal growth rate, taking that market share, as we said, to some 17%.
Yeah, we actually look at our primary bank clients as the main objective. Over the last year, we've increased the primary bank clients. Those are clients that deposit their salaries with us to 1.8 million, and that's up 45%, so quite a good performance. Total active clients, and we define active clients as people that we earn an income from, is the 4.7 million. So those will include people that just lend from us, and also people that just save with us and not necessarily transfer their salaries to the bank.
I need to jump in before both of these gentlemen, because we're going to throw at you, obviously, the potential unsecured lending bubble. And I'm sure every single journalist today has asked you, what is the temperature out there? Is there any concern?
Well, I think the concern is more around the general indebtedness levels of South Africans and not whether there's a credit bubble looming. Our own view is that the unsecured credit market can get overheated, but not in the form that it will collapse. So over the last few months, we've seen some of the major players making their credit criteria more stringent, and I'm sure the credit information from the NCR will be available tomorrow for the quarter to December, that will indicate quite a significant slowdown in growth.
Okay, Riaan, just your strategy has been, a stated strategy over the past 3 to 4 years, has been to grow that market where people's salaries are paid directly into your bank. Are you finding that your pricing of your products is making that more attractive, and you starting to attract people who are earning salaries in excess of 20,000 Rand a month, or are you still struggling to penetrate that higher income market?
Now, there's quite a momentum of people that use us now as their primary bank. I believe it's really twofold. One, the simplicity of our product offer, and the second one is our price structure.
Riaan, I mean, something that was interesting for me in terms of the announcement was the diversification of your funding sources. I think that's certainly a different tact. We know rates are low globally, so perhaps a little bit opportunistic in that respect, but maybe unpack that for us. Give us some sort of flavor in terms of your rationale, in terms of why now? Why going to tap the offshore capital markets now? Is that because you're not liking the local dynamic in terms of the capital markets? Surely there's still abundant demand in terms of demand for paper out there.
Well, there's really a twofold strategy. The one is to increase our fixed term retail savings base, and there we've been very successful increasing that by 70% over the last financial year, and the intention to tap the international capital markets. We haven't done that in the last year. Mm-hmm. And that's really our, part of our experience in South Africa. For a small bank like ourselves, it takes time to really build relationship with institutions and so forth. So we want to start tapping on the international market really to achieve that, to fund the business as it continues to grow going forward.
Do you have a target in terms of term that you'd like to achieve and that you'd be comfortable with being a sustainable number?
In the capital markets, we don't make use of funding if it's less than 2 years. So we try to fund a wholesale book long, and the tendency for the retail fixed term funding more towards the shorter term.
Okay. In terms of your cost to income ratio, sitting at some 38%, which analysts are saying is low given the model that you embark on, and obviously that's with reference to your branch infrastructure. You obviously are very cost conscious, and you're managing that line well.
Well, we've built a machine, so there's a huge focus on efficiency, and that's part of the benefit to the customer as well. I believe people go to a bank to get things done, not to get a great shopping experience. So that efficiencies really pay off, not only in terms of our cost structure, but also towards our offer to the customer base.
You're managing to maintain and grow that market share, even though we know we've seen that additional competition coming online aggressively. How are you managing? I don't want to give away, or you don't want to give away any of your state secrets, but staying ahead of the competition is obviously very noteworthy.
Well, it's really threefold. One, ensure that we continue to develop new applications, new products. Service definitely does play a major role. We're currently in the process of implementing a revised service platform, which is very well accepted by the customer base. And then pricing. This year, March, again, we didn't increase our transaction fees. And as times continue to be tough, people shop around, and the cost offer really makes Capitec attractive.
And I mean, part of your whole strategy is growing that transactional pool. That's really part of the core of your business. What about lengthening the duration in terms of the loans that you're putting out? I mean, that's something that you have seen. Some of your competitors are doing that. Probably they're further down the path than you are as a business. Just maybe give us some flavor in terms of where you see that playing out and how aggressively you're going to be looking at lengthening that lending book.
Well, at this stage, we're fairly cautious. We've lengthened our book from 3 years to 7 years, the maximum loan term. And our plan is to have a period of consolidation probably for the next 2 years, and assess our credit models and ensure that we measure credit quality properly, and also ensure that we've catered for this huge structural change that the industry is going through since the implementation of the Credit Act in 2007. Our longer term view is that there will be a migration, and a significant migration, away from secured lending to unsecured lending. And part of our strategy during this consolidation phase is to assess alternatives that will be between a traditional secured lending approach to the current unsecured lending approach for people to fund long-term assets. Because we believe there's a huge opportunity within this country, and will be a huge need as most of your long-term assets in the form of homes is not securable in the traditional form. So that's where we see our long-term opportunity on the credit side.
Just on that credit risk issue, bad debts in this country and the bad debt cycle effective, do you think we've seen the bottom of it and bad debts will reduce as a percentage of loans? Or do you think there is still risk for the formal banking sector?
I think if you look at the total industry, I can see an increase in impairments in the year to come. Quite important, is how you manage the quality of your assets. And I think there's a misconception, especially with regards to unsecured loans, that you look a customer in the eye and say, I think you're a good customer, and then borrow money to him. That's not the case. We've got very sophisticated models that predetermine our risk appetite and so forth. The only flaw in the credit models currently is still a short history on the structural change. And for that reason, we provide an additional complement to the provisioning model that is really based on history.
The mobile banking environment, some would say that could threaten your model, especially with the branch infrastructure. Are you making sure that you're ahead of that game as well, and tying it into what you're doing?
We believe people have got a need for comprehensive banking, and that is part of the attractiveness of the Capitec offer. It's a global one facility that offers you transacting, saving, credit. Customers have got the option to have face-to-face contact if they require so, and a significant part of South Africans still prefer that, or at least the opportunity to go into a bank branch and get their problem solved. On the mobile front, we've had a significant increase in that activity. We now have more than 3 million of our customers registered for mobile banking, and there's a big focus on application development to make that user-friendly and to ensure full security. Because today, mobile banking is a bit of a misconception. It's more used for buying airtime, doing balance inquiries, and doing funds transfers within its own accounts, and not payments to beneficiaries and so forth. Those are still very limited. But I see a big opportunity for us to go in that.